In today's video, we're going to be discussing the best expert advisor types for instant funding accounts. So if you've been in the trading space for some time, you may have come across instant funding firms like iFunds, X-Rating, and firms of that nature. And the issue with many of these firms is they have pretty horrific trading conditions. And because of that, many expert advisors simply won't work on these trading platforms because the spreads are too high, or the slippage is too high, and many strategies are not compatible with their offering. So first of all, why do these firms offer such horrible trading conditions? And quite frankly, it's because of how the business model actually works. If you look at a company like iFunds versus most challenge-based prop firms, they let you do pretty much whatever you want in the account subject to a max drawdown because of how their business model operates. So with like your standard prop firm, you're paying a fairly nominal amount for a large account. So like you'd pay, I don't know, $40 for a $5,000 account. And because of that, they need to have a lot of people fail challenges to be able to ever pay out because their entire business model is essentially an online casino. If you move over to firms like iFunds, usually the cost on that $5,000 account is quite a bit higher. Sometimes it can be in the hundreds of dollars just because of how the business model works. So specifically with iFunds and what X-Rating does in particular is they'll take your funds, they'll deposit it at a broker, and then they'll usually lever it up. And because of that, they are able to pay out traders even if they actually make money, simply because they're able to monetize them through different channels than just failed challenge fees. And what many of these firms operate as are essentially just a heavily leveraged introducing broker. So we're an introducing broker. We have broker partners, and that's one of our revenue streams. So I'm very familiar with how the business model works. And pretty much as an IB, depending on the exact broker partner you use, you're compensated from the spread. So usually like when people trade, there's spreads obviously, and that's how the broker makes most of their money. And you as the IB will get a certain percentage of that. And what all of these firms work like iFunds, like let's say if they have a certain percentage, if that spread all of a sudden is 5 times higher than it would normally be on a tier 1 broker, they should make 5 times the money. So what many of these instant funding firms do, because obviously they have a lot more infrastructure than your standard IB, they have to have a front-end portal, they need to have significant marketing costs, etc., to actually run a prop firm or an instant funding prop firm, they need to also make more money than your standard IB would. And for this reason, they take the spreads and they jack them up because let's say you're making X percent of the spread. If the spread is 5 times higher, as mentioned, you will make way more money. And that's exactly what they do. And because of this, that's why the spreads are so high. And that's why the conditions suck, not because they're trying to get you to lose, but because they're trying to make more money on every single trade done. And if you multiply the spread, you multiply the earnings for the IB, and that's how they make a good chunk of their money. And because of this, you have to be really careful about what strategies you use because transaction fees will be significantly more expensive. To give you a good example with Bitcoin, the standard spread for Bitcoin on Vantage is around $15 to $20, right? So that's like anywhere from 1,500 to 2,000 points. And I like to put it all in dollars to keep it easy, so 15 to 20 bucks. If you have a profit target, which is $100, like for instance a Bitcoin scalper, that can be profitable with Vantage, and we actually have one for Vantage, which is super profitable. Because if your spread is 20 bucks and your TP is 100 bucks, you still have enough room there where you can make some good money. However, let's say you're using a broker that's less competitive, you might have an $80 spread on Bitcoin, and then all of a sudden you have a $100 profit target. You're not going to make any money because the vast majority of your move is just going to pay the spread. So because of that, you can kind of extrapolate that to certain types of strategies used on iFunds. And this is why scalpers never make money on iFunds. Because like indicatively, let's say your move is $10, and on a good broker, your spread is $1. On iFunds, if your spread is $7, all of a sudden like you're out of luck because almost all of your profit goes to just paying the spread. However, if you're capturing a $100 move, and we go back to the same example of a $1 spread in a tier 1 broker versus a $7 spread on iFunds, it doesn't make a huge difference because like yes, the spreads are way more expensive, you're paying way more, but because you're capturing such a big move and you're paying a spread which is a relatively modest amount, 1% or 7% of that move, you can still be very profitable. So not to go too much into the weeds here, but this is really why you need to have a large stop loss, large TP style system. So like the actual move you're capturing has to be bigger. So usually the bigger your targets, the smaller your lot size is. So if you're scalping, use a big lot size and usually a fairly tight TP and stop loss. Whereas alternatively, if you're doing more of a swing style system, it would be inverted, right? Like you're going to use a small lot size, you're going to use a big TP, big stop loss. That works great for instant funding because then you're way less spread sensitive. Because simply speaking, the spread is going to be a much smaller percentage of the move. And if the spread is a smaller percentage of the move, you can still make money. And when I say move, it's like the distance before you hit your TP or your stop loss. Therefore, that can work. At the same time, few trades is also key. If you run a bot which trades a lot, every time you enter and exit, you're going to pay that spread. So that's why many bot developers will actually sell you high frequency trading systems because they generate enormous commissions. You don't want that if you're trading on iFunds or any sort of these instant funding firms, because if you're super spread sensitive, you're super commission sensitive, the more you churn the account, the greater your edge has to be, just because you're paying such an enormous amount of commissions to iFunds every time you do this. Conversely, non-martingale systems are critical for this style of trading platform as well, just because usually you're leverage restricted. So if you have a lot of positions which open, you're going to use an enormous amount of margin, especially if you stack that with the fact that most likely your conditions are not optimal. That's not great, and you're probably going to blow your account, and you could very well hit your max drawdown. So don't use martingale systems. Another 1.4 here is trade volatile assets. This goes back to the first point, you need to have big moves. So if you're trading something which moves sideways, you're never going to have enough volatility to pay for that spread. So that's why trading something like indices or even gold can be quite profitable, because you can have a 1% move. And if you have a 1% move and you have even a big spread, you can usually more than cover it. Whereas if something is moving by a few points, you're not going to make enough to compensate for that additional trading cost. And finally, diversified. With all of these firms, if you run more of a portfolio, you can kind of hedge yourself against any one asset's conditions. So let's say, for instance, on some iFunds accounts, your conditions for gold are horrible. Maybe by trading a basket, you kind of reduce your reliance on their conditions. Whereas if all of your eggs are in one basket, then all of a sudden you can be very, very sensitive to any sort of slippage or changes in their price feed. So overall, when trading an instant funding firm, the odds are against you because the conditions are usually pretty bad. So you have to be mindful of that, and you have to then use trading systems where you have factors where you pretty much stack the deck in your favor. So intraday swing trading is really the best approach here. So guys, if you have any questions, let me know in the comment, and I'll see you in the next video.